this week has been crucial, of course, because it's the first week, of course, of the third quarter and, of course, the second half of the year. We saw the market down around Monday, but of course it rallied. We're seeing it closing up on Friday, so certainly a great close to the end of the week. What is your take on the first week of the second half of the year?
Yes, it's actually been an eventful week for the equities market of the Nigerian Stock Exchange. After it started very slowly on Monday, declining by about 0.02%. It rallied back and closed positively today, appreciating by about 0.28%. Is actually a very positive development, considering the importance of this first week in the second half of the year. And so it could be a signal for better things to come in the second half of this year.
A signal for better things to come there, David. But what are some of the factors responsible for this market, for the market rally this week? You know, yesterday we saw the ECB lowering interest rates, and traders, some analysts do think that hot money is now going to trickle into the market. Obviously, could it be Q2 anticipation for Q2 results as well? What is your take on some of the factors responsible for today's performance?
A number of factors actually combined to drive the market upwards this week. Some of them you have already mentioned, like the external factor in respect of the decline in interest rate by the ECB, now coming to about 0.75%, which may signal some level of quantitative easing in the Eurozone. And the effect actually is that hot money will start migrating to the frontier markets, of which Nigeria is one of them. But we also have a number of other factors that have driven the market domestically. This week, a number of corporate actions actually occurred. For instance, Rhodes, Flour Mills of Nigeria, Honey Flour, together with some other companies released their results and also made some mouth-watering distributions to their shareholders. And so that impacted positively on the market. And there is also the issue of the second quarter results effect. A number of investors, together with speculators, have started positioning in the market in anticipation of impressive second quarter results that are going to be released by a number of quoted companies. And so that has also contributed in driving equities this week. So a combination of several factors really have driven the equities market at the beginning of the second half of this year. So it is only hoped that there will be macroeconomic stability, and considering the situation in the external environment, that it will impact positively on crude oil demand in the global economy, which will result in macroeconomic stability in the country, and which in turn will enable the equities market to stabilize within the second half of the year.
That's right, David. And of course, we do know that we should be expecting some interim dividends coming in as well. And like you said, a lot of investors taking position on the market, specifically in the banking sector. We've seen that index performing quite well. But I mean, I'd like to single out one stock. GTB is a major stock, one of the, like you said, the sort of arrowhead stocks that everybody is watching in terms of performance in the sector. Today, we saw that stock lose slightly. Should we be worried?
I don't think there is any cause for alarm, really, because at the beginning and up to the middle of trading today, GTB was actually very firm in terms of demand. At a point, I think the security was trading at about 16 naira 15 kobo. But subsequently, speculators lashed in and were taking profits massively. And so eventually, heavy profit taking drove down the price to declining at the end of trading. But that notwithstanding, I think the demand for the security is steady. But on a positive note, the other major securities in the banking sector, First Bank and Zenith Bank, actually appreciated today, driving the banking index to a positive close at the end of the week.
Now, very quickly, I mean, you talked about macroeconomic factors that, of course, are going to impact the second half of the year as we look at the market performance. Can you give me some game changers for the economy that, of course, will impact the market as we go into the second half of the year?
Yes, generally the macroeconomy has been a major factor affecting or impacting the equities market, and which has also been propelling the fixed income market. With the structure of the budget of the federal government of Nigeria, which is deficit-based, public finance has essentially been centered on debt finance provided by the financial markets. And so this has seen interest rates being driven up, and those crowding out equities. And so if the price of crude oil in the global market suffers a decline like we have witnessed in the past, the propensity will be there for public finance to exacerbate is debt finance, those further crowding out equities. But with what is happening in the Eurozone now, the possibility is there that the crude oil market may not decline further as global economy is likely to be restimulated. And so that will positively impact on the Nigerian macroeconomy in such a manner that perhaps the need for further debt finance may actually decline in Nigeria, such that we'll now start seeing financial assets migrating back to equities.
Okay.
And so if interest rate declines in the Nigerian macroeconomy, it therefore means that the possibility is very high that assets will start migrating back to equities, which will then become competitive. And so we hope that barring all unforeseen circumstances, that equities should be on the ascendancy in the second half.
Well, thank you so much, David Adonri, General Manager with Lambeth Trust Investment, giving us his take on the second half of the year.